Most traders don't fail because they are careless. They fail because they were never shown the full market. They were shown a simplified version of reality, a version designed to be seen, not to understood. And that difference is what destroys accounts. Imagine waking up every day carrying one thought, not money, not charts, but responsibility, the pressure to change your life, to change your family's life. So you start trading. You study everything, candles, indicator, strategies. You stay up late. You try again and again. You believe effort will eventually turn into success. But where real money enters the market, something changes. Suddenly every decision feels heavier, every candle feels personal, every loss feels like failure. And slowly your account begins to disappear, not because you didn't try hard enough, but because you were never seeing the full system. The brutal truth is this: you are not trading the full market, you are trading a visible surface layer, a simplified feed called the lead market. But beneath that surface, there is another system, faster, deeper, invisible, where institutions move billions in silence, and that system has a name: the dark execution layer. When you open your trading app, what you see feels complete. Charts, candles, buy and sell movement. It feels like the full story, but it is not. It is only the visible fragments of global liquidity. This is called the lead market because everything appears lit up and transparent. But transparency is not completeness. You were taught one simple rule: price moves because of buyers and sellers. More buyers, price goes up. More sellers, price goes down. This is called price discovery. And in theory it is correct, but in practice it is incomplete, because price discovery only reflects what is visible, not what is hidden. Here is a critical illusion: the public chart does not show total order flow. It only shows executed fragments, small participants, retail volume, minor institutional footprints. But the real force, the orders that move global markets, do not fully appear here. They are executed elsewhere, in private liquidity channels, before they ever reach your screen, and that is where the distortion begins. To understand Forex, you must understand one truth: there is no central exchange, no single global order book. Instead, the market is decentralized, fragmented, split across thousands of liquidity sources. And the deepest layer is the interbank market. This is where the Tier 1 bank operates. This is where the largest capital flows exist. When a bank needs to move $500 million, they cannot simply press buy on retail system. If they did, price would explode instantly against them. So they do something different. They break the order into fragments and route it through private execution networks, ECNs, internal matching system, hidden liquidity pools. This is not conspiracy. It is market structure. Academic finance calls this information asymmetry. It simply means not all participants see the same data at the same time. Institutions see full liquidity flow. Retail traders see delayed fragments. So when a large move finally appears on your chart, it is not happening in real time. It is the final visible stage of decision that was executed earlier in the dark. That raises one critical question. If institutions are moving size in hidden layers and the price is only revealing the aftermath, and then how does they actually enter and exit without dedication? What tools allow them to hide billions in execution while still shaping the chart you see every day? In episode 2, we expose the execution weapons: VWAP, TWAP, iceberg orders, and the algorithms designed to break the retail structure without you noticing, because what looks like market movement is actually engineered execution.